Pay me, pay me, pay me my silver now. Pay me or go to jail. Pay me my silver now.
Hey guys, Bix Weir, roadtoroto.com. Happy Silver Squeeze Day. Monday, Silver Squeeze Day. The idea behind the Silver Squeeze, now this was my post earlier. Monday, 3/31. Why not Silver Squeeze? There's no resistance between $35 and $50 silver, but anything over $50 becomes unobtainium. I did get an email this morning saying, what happened to the squeeze, Bix? They slammed it again. This is not the price of silver. The COMEX is not the price of silver. These trades are not the true value of silver. This is COMEX futures and options. They can click a mouse and put the price anywhere they want. The idea of Silver Squeeze is to take physical silver out of the market, bring it into your own possession. And it does two things. One, it prepares you for the future. And two, it removes the amount of physical silver that the bad guys use. They have to have some physical silver to create this crazy derivative 500 to 1 ratio situation to set the price of silver. So if you remove the physical silver, that's when you start getting into, holy crap, is it a real exchange even? Is the COMEX a real exchange? If there's no physical delivery, which we had the biggest month ever last year, I believe ever, it's 81 million ounces, and we have another delivery month next month. So is it possible to remove the physical part of the COMEX and still have a legitimate exchange? I would say no. I think even Jeffrey Christian would agree with that. If you don't have any link at all to physical silver, why would you even call it a silver exchange? It's really not. But why is the price of silver determined on a derivative exchange? That's the key. And Jeffrey Christian says it every time. He goes, well, it's how the market works. They roll over their shorts. I'm like, wait a minute. It is illegal for a derivative market to determine the price of silver in commodity law. That was always the argument back in 2010 when Jeffrey Christian had the debate with Bill Murphy. And Christian said, well, yeah, they trade 100 to 1. They just roll over. They roll over the futures and options to the next month. And that's how the market works. And then the CFTC comes out and says, well, that's not really legal to set the price of silver with futures and options, even though Jeffrey Christian said so. Jeffrey Christian is the mouthpiece of the banking cabal. Always has been. The biggest crack up is he waits for 1 month after the Silver Institute releases its annual silver survey to release his numbers, because they got to make sure they jive with the other ones. Oh, we're completely independent. It's such a joke. The silver industry is a joke. People who own silver companies, if you own a mining company, you have, other than Keith Neumeyer, you have a completely ridiculous leadership. There's only one thing a silver mining company should be jumping up and down about, and that's the decades-long manipulation, price suppression of silver. That's your job. It's your industry. This is what I screamed at during that 2010 Silver Summit meeting, where afterwards they just kicked me out of it. No more Silver Summit for you, Bix Weir. Because I lectured all the mining executives sitting there. I showed them who was doing the derivatives. I showed them how Blythe Masters, who invented the credit default swap at JP Morgan, well, she didn't quite invent it, but she was the big advocate for it. All of a sudden, when it blows up in 2008, she gets transferred to run the precious metals division with her derivative knowledge. This is not rocket science, my friends. This is common sense, and the silver industry needs a complete revamp. We need to get rid of CPM Group. We need to get rid of the Silver Institute. Those are really the only two, quote, industrial analysis type of companies. Those two entities, which is so ridiculous, are the people who tell the world how much silver was used every year. Even though the Silver Institute gets their numbers from Metals Focus on the silver survey, and yet Metals Focus changes historical numbers every year to make the picture look better. It's sad, it's embarrassing, but it's what we're dealing with. So what do? Never invest in miners. That's the worst investment. Why? Because you don't have management that knows what the hell they're doing. Other than Keith Neumeyer. I like Keith Neumeyer. But Keith rarely talks about the most important risk of First Majestic. He has foreign mines. What's going to happen when the system cracks? When JP Morgan goes down because of the Epstein stuff and all of a sudden the derivative market, $3 quadrillion goes south. Every single country is going to nationalize their silver mines. Of course they will. That's the risk you run. And that risk has grown every year since I've been in silver. We are at peak risk now. We are literally staring down the barrel of the key reason to have physical silver in your own possession. It is because when the system falls apart, every country will put their hands around their own country, their own people, and say, what do we have? What can we use as money? Obviously, Mexico is going to nationalize all the silver mines. U.S. will nationalize all the warehouses of silver. England, they pretty much already nationalized everything anyway. This is it. This is the endgame. I don't know what to tell you. It's the only reason to hold physical silver this entire time was the endgame. Because the endgame, we have a glaring reality will hit us that there's massive amounts of gold and there's very little silver left. So that's where we are. So, yeah, I was wondering if today they would make it a little more dramatic, like, put the price of silver to minus $40 like they did with oil a few years back. They can. It's a click of a mouse. Or they put it to $1 million an ounce and make everybody scratch their head. They can. It's a click of a mouse. I don't know. There's nothing else to say. The reality is the silver market, because of lack of leadership in the silver market, has been abused. It's like one of Jeffrey Epstein's victims. It's been abused for so long and nobody does anything about it. But you can today and every day from here on out. Buy some physical silver. Every time you buy an ounce of physical silver and you bring it home and stick it in your safe, you are taking that ounce away from 500 derivatives. It makes the ridiculous COMEX the joke that it is. And the beauty of this is India knows it, China knows it, Russia knows it. They're slopping up all the physical silver they can get. The question is, when is Elon Musk going to buy up all the silver? His companies would go under if he didn't have the silver for the componentry to electric cars and especially the Tesla tiles, his solar panels. What about all the solar companies who are going to be just scratching their heads as to what to do? What are they going to do if they can't get any silver for their silver, the Green New Deal and all that? It's still going on. The projections for silver, for solar installs this year are going to be bigger than last year. Not massively bigger like they have been for the past 3 years, but does it really matter? Because the Silver Institute doesn't even report those numbers. Last year, or the year before last, the last silver survey, they reported half of the silver that was used in solar. Half. Exactly half. And then they changed historical numbers to make it look like it wasn't half, but they only, the amount of installs in solar panels went up 76%, and they only reported 34%. 78 and 34. How is that possible? Did all of a sudden half the silver was not necessary all of a sudden on all those solar panels? No. They lie, they cheat, they steal. So anyway, the COMEX Silver Price, the price of futures and options, $30.86. Again, anything over 35, there's no resistance for all the tech traders between 35 and 50. At 50, there's going to be people selling their silver. There will be. And it'll go down a little bit, but the reality is it's probably not going to be physical. They'll sell the derivative contracts because it's hit 50 and gone away. But if it busts over 50, like a knife through butter, good night. Nobody has any technical analysis over $50 because it's never been there. It's kind of like when gold went over 300 back in the early 2000s. or late 1990s. It went over $300 and everyone's like, oh my God, it's never been this high. And poof, now it's 10 times that. So what is 10 times $35? That's $350. Do I think it'll go 10 times? No, I think it'll go 20 times. $600. It's the first stop after 50. Bix, you shouldn't say that. You ruin your credibility. You know how many times I've heard that in my life? You're going to ruin your credibility. I don't care what other people think. I have my own brain. I can analyze it myself. I know for a fact that silver's been price suppressed for 180 years. I would not be surprised to wake up one morning and see silver at $5,000 an ounce or $10,000 an ounce or unobtainium, meaning no price can get you any silver because everybody is holding on to their silver. Who are the first people? Let's just say silver breaks over $50. Who are the first people to hang on to their silver and not sell it till they figure out what the real price is? It's all the brokers and dealers out there. They know what silver is. They're not going to sell you silver if they think the price is going to be $100 today. They won't sell you $50 silver if they think the price of silver is going to be $100 tomorrow or $1,000 in a week. That's unobtainium. Everybody just stops selling their silver. Anyway, so yeah, silver went up a bit and then they slammed it down just another day on the COMEX. And you can see it right here. Pretty decent volume. Not bad, not bad. It is the highest volume of the week. It's up there with the highest volume of the month. I think it's great. Let's have another silver squeeze tomorrow. Everybody's learning about silver. There are so many people out there talking about it. Look at this. Can you believe these numbers on Friday night? Trending. Silver. 97,000 posts. 97.7 thousand posts. Bravo. Biggest silver squeezes here on Monday. I think that's wonderful. But remember what this is. This is a retail squeeze of the real metal, not a price squeeze. You cannot drive the price up on the COMEX by buying retail silver. You just can't do it. You can't even do it buying the commercial bars of silver. You just can't do it. That price is 100% futures and options. That's it. That's all the price. It's all it ever meant. Futures and options, derivatives, traded 90% of them traded back and forth between the big banks. Voila. So bravo, get your physical silver, get it in your own possession right now. You can still get it. Thank God for that, right? Let's take a look at a couple of these posts. I love these meme stuff. Boom. Silver. Hold silver strong. That's what I get from that. That kind of looks like Trump. AI Trump. Absolutely. Trump, you see he's literally painted the whole Oval Office gold. He knows exactly what's going on. Silver's the endgame. Gold's going to be great for the United States of America to use as money because we have so much of it. We have probably 1 million to 2 million tons of gold. How can you say that, Bix? There's only 200,000 tons ever been mined. That's bullshit. You're listening to Jeff Christian, the gold, what do they call it? The gold.org guys. Ridiculous. Amount of silver needed in 1980 to buy the average home was 950 ounces. Interesting. People showing off their silver. I love when people show off their silver. I like that Trump. Look at a Trump bust in silver. That's cool. I'm doing my part, says Silver Deegan. Just bought $7,000 worth of silver. Good job. Silver squeeze day. Silver $34. Chris Twain. I mean, I've gone back and forth with loving and hating Chris Twain for a very long time. He disappeared for a long time. Went through some personal shit, and came back looking like the Unabomber a little bit. Love him though. I love him. I've never seen a guy with more conviction. He hates cryptos because he didn't understand them early on, and now you missed your boat. And Chris isn't the kind of guy to say I was wrong. So maybe he has. I don't know. I haven't heard him talk much. But he's out now. He's back. He's back. Good. You know, the more people who can spread the message of silver, good on you. Look at this. SLV warning. Yeah, SLV is a fake silver ETF. There it is. That's exactly what's going on. Goldman Sachs trader, what's his name? Jeff Curry told everybody in a CNBC interview that the shorts are the ETFs. So the authorized participants of SLV who are supposed to deposit the physical silver into the SLV are the ones taking the short positions out, meaning that if you buy SLV, you literally are not even helping the price. The more silver goes in SLV, the more shorts that bankers are going to put on. So, yeah, it's a fraud. If you bought into SLV, I'm sorry, get it out. Go get yourself some real silver. Gold-silver ratio remains at 90-1. Silver squeeze is on. And remember, silver squeeze is removing physical metal from the hands of the bad guys. This is really on a retail level. But you have guys like this. David Bateman. I looked this guy up. He's a real deal. He's one of the tech billionaires. And he understands silver. So he posted this the other day. Here's what he said. And I agree with most of it, but not all of it. Here are the reasons I invested close to $1 billion in precious metals over the past 6 months, including the purchase of 1.5% of the annual global silver supply, which is 12.69 million ounces. The global monetary system is about to collapse, the Great Reset or the Basel endgame. The biggest credit bubble in history will soon pop. There is no way the U.S. can refinance $28 trillion in maturing treasuries over the next 4 years without an obscene amount of money printing. All this is absolutely true. Trump tariffs hasten the collapse, and it's by design. Hey, has he been reading The Road to Ruta? Maybe. Gold and silver are the only meaningful raft in life. Physical possession is everything. I believe in the second part, there are other rafts. I believe there are other rafts. I think he's talking about like a monetary type of raft. I don't know. The whole world right now is a sophisticated game of musical chairs. The chairs are the precious metals, potentially. Crypto is a psyop. Those who purchase will have no chair when the music stops. I don't agree with that. I mean, makes no sense. Makes no sense to me. Whether or not the NSA created it, I believe they were involved, absolutely. Hitomi Tashimoto was the creator, which I've talked about quite a few times. And absolutely, the U.S. government's in on it. They have the keys to the Satoshi's 1 million Bitcoin. So, but that doesn't mean it's a psyop. A standalone Bitcoin, if you don't understand it, and it could be called a psyop, you don't need to fully get it. Apparently he doesn't. That's fine. He's buying silver. He'll be fine. But absolutely, we are going to a decentralized crypto future. I'm sorry for everybody who, most people who say it's a psyop say that because the NSA was involved, which is true, and they didn't buy any early on. Just because they didn't understand it and still don't understand it. There is such thing as digital scarcity. It's a standalone asset just like gold and silver. That's why I think that's what this guy is missing. It's a standalone asset, dude. You'll find out how important that is in the coming days, weeks, months. All right. Real estate, crypto, stocks, bonds will lose significantly compared to precious metals. Yeah, I agree. Although I think there will be cryptos that come out the other side, not during. None of the crypto exchanges will even be open, nor will the gold and silver exchanges. The banking system has been meticulously designed to seize your assets to buoy up a collapsing banking system, the great taking, and you have zero counterparty risk with precious metals. That is correct if you hold them in your own possession. But you have zero counterparty risk as well if you hold certain cryptos in your own possession. I am 20% ready on most of my purchases. I'm up 20% already on most of my purchases. Yeah, but you're looking at the COMEX numbers, so who cares? This is not a drill. Your grandkids someday will either muse or lament this financial decision you're now faced with. Don't fail them. I agree. Not financial advice for educational purposes only. He showed one of his little stacks of silver. I don't agree with buying. I mean, he's buying in such crazy bulk. But the large 1,000-ounce bars, I think, he better drill into a bunch of those and find out if it's real silver. He doesn't know. Unless he's drilled all these bars, I would, because they might be tungsten in there. Oh, wait, no, that's gold. Molybdenum. Molybdenum is the metal that is closely aligned with the density of silver. So drill those bars, my friend. I would have bought coins. But hey, up to you. Where are we? More silver squeeze stuff. Silver's been slammed 4 out of the past 4 trading days. Full confirmation of everything I said in my report. And that report is Mechanics of Silver Price Suppression. It's good. I read this, Jesse Colombo of the Bubble. It's a good report. It basically says the road to root of stuff, the bullion banks, the LBMA, gets down to the nitty gritty, shows when the attacks happen. But all this is old news. I mean, it's not like we haven't proven 100 times in the past 25 years that silver price is manipulated. Every day, every trade. There's no such, they get you to believe that it's not. So you start believing in this, the price of COMEX silver. That's the lie. This whole thing is just made up. So anyway, all right, what's going on? In this non-delivery month, we have one entity supplying half of the physical silver for the April non-delivery month, and that is, you can guess, HSBC. Hong Kong Shanghai Bank, the original rigger of silver from the 1850s, has covered 425 shorts in delivery. All this stuff is shorts. HSBC is and JP Morgan are the big shorts. A lot of people are surprised that Bank of America is not. They were in December, but now they're pulling the money back, and Bank of America was involved in the leasing of JP Morgan silver. So everybody thought, because you can see it in the OCC data, they leased 1.2 billion ounces of silver that JP Morgan had accumulated during the silver rig job that everybody was screaming about from 2008 to 2015. That was a fact. We saw it in the OCC numbers, the OCC silver derivative numbers. And then Ginny helped us with this. There was a new way to rig silver, and that was through leasing out the JP Morgan silver to Bank of America. And then that's when it gets to, well, why isn't Bank of America struggling right now? Because they subleased all that silver to entities like HSBC, BlackRock, Wells Fargo, Morgan Stanley. I mean, you can just go down the list. Standard Charter. This is the banking cabal and the silver rigging cabal. And it was all done through leases, off-balance sheet leases, all this bullshit. It's the electronic games of the silver market. That's why we just have to take physical delivery. And here's the total for last month. 16,000 contracts, 16,149 contracts over. It's close to 81 million ounces of physical silver were delivered. And then you say, well, who took them? Who was the big taker? And it was, and I talked about this in a private road discussion this weekend. If you're not on the private road, get on the private road. The biggest taker was JP Morgan customers. Is this a shell game? Who knows? That's 35 million ounces. But here's the big one that surprised a lot of people. Wells Fargo, by the way, took 6 million ounces. The big one was Macquarie took a decent amount. Here, BMO Capital. Everybody's like, holy moly, look at BMO Capital. They took almost 15 million ounces, about 14 million ounces. Well, the head of capital markets for JP Morgan Chase went to BMO Capital last month. Well, there you go. So, no, it's just another con game. It is what it is. So, yeah, my favorite stuff right now is this guy. Now, he better check these bars. Again, he's got to drill into every one of these bars. And you can refill it, and it'll leave a little, they won't look as pretty, but you don't get any extra money for one of these bars looking pretty. And by the way, if you pull these bars off the COMEX, don't expect to go back in and easily sell these bars back into the COMEX. They have to be brought back into inventory, and they have these huge, crazy hoops you got to jump through to get 1,000-ounce bars back into the system. Once it's gone from the system, which I highly recommend, you got to get them in your own possession somehow. This guy's got enough money to have his own vault somewhere. But yeah, I drill those bars. I do it in the presence of the COMEX. If you got these from the COMEX, say, hey, I'd like to, before I take them out of your warehouse, I'm going to drill 20% of them. I want you to watch this. Because if I take them out, then drill them, and find out there's molybdenum in them instead of silver, it's the chain of custody is broken. COMEX would say, hey, you took them out, you swapped your bars. So if you drill them within the COMEX warehouse, have them supervise it. I mean, you got enough money, dude. You better check that silver's real. I would check at least 10% of those bars. Drill them, melt the silver, put it back in, and they're all, if there's not a problem and you feel you've done 10 or 20 or 30 bars, hey, good on you. Bravo. It's probably going to be a molybdenum-filled bar somewhere in there, but hey, you did your duty, and then get them out of there. That's my take. Consulting fees will be charged later. I'm not going to charge you consulting fees. Anyway, yeah, I think next month's going to be great for silver. Again, yeah, but keep buying physical. Every day should be a silver squeeze day. And it will never show up on COMEX. Like I've said this many times, we're not going to see $60, $70, $80 silver on the COMEX. The COMEX will be shut down by then, which is, I think, what we're headed for. All right, here's how. Here's a great article that David Morgan posted, written by a guy named John. I don't know who it is, on World Day. Why silver is becoming a better investment than gold in 2025. The data is surprising. It shouldn't be surprising. I mean, silver should have been the best investment in the past since the Industrial Revolution, when we started using up silver. I mean, back in the day, yeah, the amount of silver available was, 10 to 1, 15 to 1. That's how, in the last, before 1900, that's how silver and gold were priced, in a ratio between each other, because they were both money. Silver was the people's money, and the gold was the banker's money. And it was about 10 to 1 to 15 to 1 at times. It depends what areas you're into. Certain places have more gold than silver, and vice versa. But globally, before really the Industrial Revolution hit and electronic revolution hit, yeah, there was a hell of a lot of silver. There was like 60 million ounces that had mined in history. And then all that silver has been used up, the vast majority of it. There's maybe 2 or 3 million billion with a B, billion ounces. There was 60 billion, and now there's probably 2, 3, 4 billion maybe left. Coins can come back in if Apple Computer wants to bid $1,000 per silver ounce. I'll give them some of mine. Truthfully, they need it, and they use it in such small quantities. They'll give you $1,000 an ounce for your silver. When unobtainium comes, you can charge anything you want, because they'll pay anything you want, because they will be in desperate need of physical silver, such that they can make their products. Everything at Apple has a little bit of silver. It's the best conductor, and it's used all throughout electronic devices. Flat screen TVs, holy crap. What will Samsung and Sony be paying for silver when it becomes unobtainium? I mean, they need like an ounce or two for every flat screen TV. The days of a $500 50-inch TV will be long gone by then, where you can get it for, anything under $500. Try $5,000. Remember when you had to pay $5,000 for a big screen, flat screen TV when they first came out? We're going to get back to those days. Call it inflation, call it what you want. Any industrial item that uses a lot of silver will be in jeopardy. Solar panels will just end overnight. All the money going into solar panels. I think that last year my number was 450 or 500 million ounces went into solar panels. Of course, Silver Institute won't say that. They'll come up with half. That's their motto. They'll come up and say, oh my God, there was 250. No, there's 500 or 550. This year, if it keeps going, you can still get silver under $50. We're probably looking at another half a billion ounces of silver going into solar panels, and then all the other use cases in AI, which is apparently Elon's having problem keeping up with the AI stuff. It is so popular, he just can't make it fast enough. All the storage required, all the processors required. Sounds like a great match, Theta and Tesla, if you ask me. Theta and XAI. It's going to be a great match. I think at some point, Theta guys, Mitch, get over to Tesla, talk to Elon, and say, hey, I can solve your problem faster by using the Theta edge nodes. We'll find out. We'll find out, right? Interesting, Trump says, couldn't care less if foreign automakers raise prices due to tariffs. Tariffs are supposed to come out on the 2nd, which is Wednesday. So there's your big question. Right now it's autos, 25% on autos. Well, Mexico and Canada are our biggest importers of autos. And silver, by the way. But a huge part of Mexican production is autos for the United States, parts and actual transportation vehicles. 25% tariff is massive. Is he going to do it? Yeah. Why is he going to do it? To destroy the system. You don't think Mexico knows where the chink in the armor is? The kink in the armor? The kink in the armor is for the United States of America? It is the silver. Physical silver. Where do we get most of our silver? Canada and Mexico. Mainly Mexico. I think 40% and 25% around there. Or 40% and 20%. Around 60 to 65% of our silver is imported from Mexico and Canada. You don't think they have a big hammer they can hold over the United States? Like, for example, Mexico. Are you going to put 25% tariff on our auto exports, imports into the United States? We're going to put a 300% tariff on all silver products leaving Mexico going to the United States. Bang! You just destroyed all the banks on the planet. It's a chain reaction. When one of these mega criminal banks falls, HSBC, JP Morgan, Bank of America, it's over. The game is over. It's the end game. I think that's exactly what Trump and his team are trying to do. Trigger the end game. And in the end game, all debt's wiped away. So the United States is the largest debtor in the world right now. We win. Whoever has the most debt. And then, oh, by the way, we've been hiding all this gold in the Grand Canyon, at Chocolate Mountain, all over the United States. Every time they find gold, they put it in a natural park or a secure area for the green spotted toad. Dianne Feinstein was very good at that. They nationalize every time they find gold, silver, uranium, anything in the ground because they know we're going to use the rest of the world's first. Use all the resources of everybody else and then start using your own. It's been a brilliant move and it's lasted 100 years. And we create this, it's not even a piece of paper anymore. As Elon Musk will tell you, it's not even electronic blips anymore. There's nothing behind the blip. There's no bank account behind these computers that are paying these bills. Infinity money we have hit. I've been saying this a long time. I didn't think it would ever be announced, but that's exactly what Elon has announced. The U.S. government is paying bills with checks that have nothing behind them. They're not checks. They're electronic blips with no bank account behind them. That's where money's being created. We always thought it was being... some very naive people think money's created at the Fed. It's not created at the Fed. They create some. Congress creates some. The vast majority of money, prior to now, was created at the banker level. JP Morgan Chase, creating money out of thin air to loan it into existence. They need $1 in the bank, $1 that they hold to lend out 9 more. That's where money's created. And now we find out the U.S. government was creating even a better way than the banks. At least the banks had a 10-to-1 ratio for $1 that they had to create 9. The U.S. government says, I don't even need money. I don't even need any capital in the bank. I'm going to create money because I'm the government, and I'm going to create it on a computer because you can. The difference between $100 billion and $1 trillion is a little tiny zero. That's how insane things have gotten. That is what's being exposed. That is what will end the system, just like Ruta wrote in the sand in the 1981 comic book out of the Fed. Wishes and Rainbows. Ruta wrote in the sand an economic formula called On the Road to the Golden Age. If you don't know this, go to roadruta.com. It's right there if you go to roadruta.com, right there, the first 2 videos. Secrets of the Federal Reserve and Golden Oldies to a Crypto Future. Chris Drain should watch that one, by the way. And then I talk a lot about the silver usage. 4 years solar. Okay, look at this. I love this data point. 4 years solar installs rise 407%. From 2000 to 2024, it rose 407%. But the silver usage only rose 232%. That is impossible. Mainly because the vast majority now of solar panels being installed are TopCon, which use about 1.5% more silver than the regular solar panels. Does it all start making sense? Why does the Silver Institute, why are they so desperate to jerry-rig these numbers? Well, you don't want to tell the world that the consumption of industrial silver is actually 1.5 to 1.6 billion ounces and not, the 1.1 billion ounces. You don't want to tell the world that because the rest would be saying, oh my God, this is going to use up silver so fast. And it is. Look at the projection for 2025 for this year. Projection is 670 gigawatts DC. That's another big jump. Is that a little over 10% jump? And it's all TopCon. Pretty much all will be TopCon. And there are starting to become new ways to make solar panels with less silver, but they are not being mass produced right now. That takes a long time. And the companies in the solar industry is on their freaking knees because of overcapacity. So I don't think anybody has the money to redo their whole line and put in this new kind of solar panels that uses just a tiny amount of silver. They just don't have the money to build the capacity to make those. Will they in the future? Probably not. They'll probably go bankrupt first, then restructure their debt, and all of a sudden we'll be able to make solar panels with very little amount of silver. But it's not going to happen if silver's still at $35. They still make money doing it, so they just keep doing it. Doing it and digging it. Anyway, so I asked SuperGrok, which is the X AI, how will the Trump's 25% tariffs on Mexico and Canada affect the physical silver market in the USA? Here's the answer. Trump's proposed 25% tariffs, this is for the 2nd of April, on imports from Mexico and Canada, if implemented, could significantly impact the physical silver markets in the USA due to the reliance on these countries for a substantial portion of silver supply. Here's a breakdown of the potential effects based on available information and economic reasoning. Oh my God, we have economic reasoning. Supply and demand. Mexico and Canada are major suppliers of silver to the U.S. Mexico is the world's largest silver producer. And together with Canada, they account for a significant share of U.S. silver imports. Estimates suggest that Mexico supplies around 44% and Canada around 18% of U.S. silver imports. This means roughly 60 to 80% of the raw silver grain entering the U.S. could face a 25% tariff, depending on whether the tariffs apply universally to raw materials and finished goods like bullion coins. I don't think it does matter because if Mexico's pissed off, they'll automatically put those on. It doesn't matter what Trump does. The U.S. produces only about 17% of its domestic silver demand through its own mining, leaving it heavily dependent on imports. So Trump throwing down tariffs like their Tic Tacs obviously is going to have major impacts on silver. A tariff would increase the cost of importing this silver, potentially reducing supply availability unless domestic production ramps up significantly, which it can't. It'd take 10 years to fully ramp up silver so that we don't have to rely on everybody else, which is unlikely in the short term due to regulatory hurdles and the time required to expand mine production. Price increases. The immediate effect of a 25% tariff would likely be a rise in the cost of physical silver in the U.S. market. Importers would face higher costs, which would likely pass on to buyers, including refiners, mints, and ultimately retail investors and industrial users. Posts on X and analysis from precious metals dealers suggest the silver price could surge by 20% or more in the near term as the markets adjust to the new cost structure. For example, popular products like Canadian maple leafs and Mexican libertades could see steep price increases or reduced availability if importers scale back due to the added expense. Additionally, the tariffs could create a bottleneck in the supply chain. Global silver supplies are already considered tight, and with the U.S. potentially pricing itself out of the market, as some on X have speculated, premiums on physical silver products could rise sharply. This would be especially pronounced if stockpiles dwindle and demand remains steady or increases. By the way, the demand for silver is very inelastic. Elastic or inelastic? One of those. The price doesn't go up. As the price goes up, the consumption doesn't really go down much. I mean, if it goes way up, yeah, the consumption will go down quite a bit. But $50, $100 doesn't really matter all that much for the applications that it's being used in, which is tiny, tiny amounts in electronic products. Market shifts and substitution. The tariffs might encourage buyers to seek silver from alternative sources, not subject to the 25% levy, such as Peru, another significant silver producer, or domestic U.S. mines. However, shifting supply chains takes time, and Peru alone may not fully offset the volume loss from Mexico and Canada. By the way, Peru's already forward sold all its silver to China anyway. Moreover, U.S. mines face challenges like environmental regulations and permitting delays, limiting their ability to quickly fill the gap. If Mexico or Canada retaliate with their own tariffs, as Canada has threatened with 25% duties on $155 billion of U.S. goods, and Mexico signaled similar intent, they could restrict silver exports to the U.S. or redirect them to other global buyers, China and Europe, further tightening U.S. supply. Obviously, they're going to do that. One post speculated that 25 to 50% Mexican tariff on silver exports could amplify this effect, though no official policy has been confirmed yet. Trump has put the United States basically in the crosshairs of the people who want to take down the banking cabal. And it's on purpose. Of course it's on purpose. Demand factors. Silver's dual role as an investment asset and industrial commodity complicates the picture. Industrial demand, particularly for electronics, solar panels, and other high-tech manufacturing, relies heavily on silver and may not decline significantly despite the higher costs, as substitutes are limited. This sustained demand could exacerbate price pressures. Meanwhile, retail investors might either rush to buy physical silver before prices climb higher, a stacking strategy noted by dealers like SD Bullion, or balk at elevated premiums, potentially cooling speculative buying. Economic and market context. The broader economic fallout from the tariffs could also influence silver prices indirectly. Economists estimate that 25% tariffs on Mexico and Canada could reduce U.S. GDP by 0.3 to 0.6% and increase consumer prices by 1 to 1.2%, with ripple effects like higher inflation and weaker growth. A stronger U.S. dollar, as seen in market reactions to tariff announcements, might typically suppress precious metal prices. But silver's physical supply constraint could override this, especially if the industrial demand holds firm. Uncertainty and volatility. The tariff's full impact remains uncertain because of the scope, duration, and enforcement are still fluid. For instance, Trump has adjusted tariffs in the past, lowering Canadian energy tariffs to 10%, and could exempt certain goods or negotiate deals to mitigate effects on key industries like automotive and manufacturing, which also uses silver. Retaliation from Mexico and Canada, if broad and sustained, could escalate into a trade war adding volatility to silver markets as traders react to headlines and policy shifts. Conclusion. In summary, Trump's 25% tariffs on Mexico and Canada would likely drive up silver prices by the U.S. by increasing import costs and tightening supply, with potential price surges of 20% or more in the short term. Supply chain disruptions, higher premiums, and reduced availability of popular bullion products could follow, though the extent depends on the retaliation, substitution efforts, and policy adjustments. While domestic mining and alternative imports might eventually ease some pressure, the immediate effect would be a more expensive and constrained silver market for U.S. buyers. Investors and industry players may need to act quickly to secure supply at current prices, as suggested by some market observers, before the tariffs fully take hold. As we can see, that's exactly what happened on the COMEX last month, with the official number coming in at 81 million ounces. I think it's the largest, or close to the largest ever delivery month. I see this continuing. Next month, holy crap. If the COMEX is open next month, we could see 100 million ounces of physical silver delivered on the COMEX. And that's not to discount what's going on in India. Now, India only buys on the price slams. So India really is only a big buyer under the moving averages right here. And you can see all last month, we've been way above the moving averages. I don't expect much out of India with their announcement of imports. I think it's the 15th they come out with that. They've already imported, I'm trying to remember the numbers. I think it's for 60 or 70 million this year in the first 3 months. I think it's probably, it'll probably be the first 30, 20 and 30, I think is where we were. And then we might see another 10 to 15 maybe this month. So nothing big into India. Of course, Russia has announced it's buying silver. China has announced it's buying silver. Massive amounts of silver is leaving the LBMA. So very exciting times. And on the private road, I have posted a couple over the weekend to talk about what's going on right now behind the scenes with the tariffs and with silver, and the link between silver and the Epstein and JP Morgan board of directors and things like that. That's the kind of stuff I talk about on the private road. If you want to join, go to roadtoroad.com. First, listen to these watch these two videos, because it might resonate with you. It might give you an idea of what's really happening behind the scenes, according to the Road Ruta. And then you can subscribe to the private road by clicking on the subscription link right here at the top. We are currently giving away 5 Theta, 50 T-Fuel, and 500 T-Drop, loaded on a paper wallet. I think these will be very valuable after the crash. Cryptos are all about after the crash. And, if we go to war with China, which is a possibility, I wouldn't say it's a likelihood yet, but it's I'd say more than 30% chance, some kind of war. I think there's a 100% chance that China's going to go into Taiwan, which, if we get mad, that would cut off all the chips being the high-end chips to the world. So, there will be a struggle. Elon's going to have to figure out things. I can see a partnership between Elon and Theta, because Theta is a solution to the China chip problem, China-Taiwan chip problem. Anyway, that's what I got for you. Bix Weir, roadtour.com. I'll talk to you later.